Hello and welcome, and we're here at Holistic Investments, and I'm your host, Konstantin Kogan. I'm really excited to have an amazing guest today, Leeor Groen, who's a managing director at Spartan Group. Hi, Leeor.
Hi, Constantine. Great to be here.
Great to have you here. Finally, we're having it. I know it took us a while to reschedule multiple times, but really excited. We know each other for some time already, and I know you're as an angel investor, VC, and like you had tremendous career, which we'll get into a second. But traditionally, first, to be safe on a legal and compliance side, we have to throw this disclaimer that this content is for informational purposes only, and you should not construe any such information or other material as legal, tax, investment, financial, or any other advice. Now we're off the hook. Let's talk business. Lear, I know that you have very interesting past, right? Overall, you started your career from consulting firms, you've been to multiple strategic partnership roles and also ranging from like big four companies, KPMG, PwC, you've been in private equity, so tell us your journey. How did you even get to Web3?
Yeah. Yeah, I think it's a common story for a lot of people who got into what I would say class of 2016, 17 ahead of the ICO boom. At that time, it all started with the Bitcoin white paper, I think, for most people, and a concept that, oh, wow, there is something interesting here that makes sense to spend a bit of time on. And for me, actually, I went to grad school in Switzerland, and I was just graduating at the time. And before jumping into, the next stage of the career, classic roles of banking or consulting, I really wanted to spend some time in understand what this technology was about. So I was curious enough, had started purchasing my first Bitcoin at that time in 16, and really wanted to understand, what this community was and what people were talking about. And, at that time you had meetups all around the world. I went from Switzerland. I then went to Tel Aviv, to China, to Sydney, as well to San Francisco, and really just go to the local meetups to understand what people are talking about. And in those days, everything was enterprise blockchains are coming. You had the big events sponsored by large tech companies still about this idea of decentralized internet and the Internet of Money concept, which of course, came around in different ways and probably different than what everyone expected, but kind of went down that rabbit hole and found it impossible to look back. So yeah, came into the industry, never looked back. Early venture fund out of Switzerland, which I started with in 2018, and basically then joined Spartan in 2021, which we've been one of the most active players in the industry out of Asia since being founded in 2017. So that's the initial level of the rabbit hole there.
There's a short version of it, I would say. So the fund was Blockchain Valley Ventures, right? So you've been there for 4 years, right? And I'm sure backed a lot of amazing companies before it got acquired by Leeor Group, right? That's a short version of
Exactly.
the story, correct?
Exactly. So, yeah, I mean, at BVV, we actually, I mean, at that time, were a spin-off of what was the first crypto exchange in Switzerland, a company called Licker, which was one of the early pioneers in the space. And really, I mean, at the heart of, what we now call the marketing buzz around the crypto valley. In those days, I mean, the Ethereum Foundation and the whole community built around Ethereum. Vitalik was living in Switzerland. We had a really strong, like literally people were turning up to the local tech meetups on meetup.com, right? It was not what it is today, and certainly hadn't had that success. But we had a small group of early supporters of, more than just what Bitcoin could provide, and wanted to go, more into that. So a lot of these early players in the Swiss ecosystem, again, none of them made it to be as big a household names as the layer one foundations and protocols that are based there. But a lot of these ancillary businesses, picks and shovel plays, ended up getting acquired over the years and rolling into bigger entities and organizations. So I've certainly seen a lot of that happen over the years.
Now, maybe for someone who's not familiar with the M&A structuring, can you help us to understand, why would another group buy, let's say, a VC firm? Like most of the people can consider, okay, where there's a traditional company that having revenues, well, the asset management M&A is a bit different in the structure, and maybe you can share more info.
Yeah, no, it's a good question, right? Because I think a lot of people go through this make or buy decision with any new product or service line that they're looking at. And I mean, asset management as a business itself is regulated, and a lot of the underlyings within crypto are not regulated, or certainly haven't been for many years. And I think that understanding of what this asset class is, I mean, nowadays we call it, genuinely an asset class. You have ETFs, it's used as collateral, so securitized assets, and that requires certain definitions. But at the time, I mean, basically, if you're looking at how to approach this industry and what it means, yeah, it's competence building, right? And I think if you want to move into this space in a big way, which obviously we encourage people to do and to take it seriously, and we have been doing that for many years, you kind of need to bring that in-house, and just having, one partner running around, investing in the next hot thing. And a lot of Web2 VCs went through that process in 2021. A lot of people got burnt on FTX and others. I think that just shows exactly why that classic model of being a holistic generalist tech investor doesn't really make you a great investor in the crypto industry. So a lot of people have tried, a lot of people have failed, and I think the faster people understand, how that dynamic works and what this industry really operates like, you need to fundamentally scrub yourself clean from all of the legacy thinking that's weighing you back of how equity capital market works, how private markets and tech venture funding rounds work, what is the value of tokens and where is the value capture. And I think for a lot of traditional VCs, it's hard to get their head around. So yeah, glad to have gone through a process where we were identified and acquired by one of the larger VCs in Germany, who bought us as a Swiss-based venture fund, and that was fun while it lasted. And obviously, then made the shift over to Spartan Group myself, where I've been with since 21.
And that's an exciting journey, I'm sure. Like Spartan has more than 500 million under management, right? And I know you're growing and expanding. You made a lot of great investments. So maybe let's start from the beginning. Like, what is your investment thesis, and like what differentiates you from other VCs?
Yeah, great. So, I mean, look, Spartan itself has multiple different business lines at this point. So we've grown to an organization of about 35 people, mostly based in Asia, but I have the privilege of spending my time mostly in Zurich and Switzerland, but between Zurich and New York. And really, I think that for us, we consider ourselves a strategic partner to the industry. And through Spartan Capital, our asset management business, I mean, for us, what's been very intentional is the way that we structure our funds and focus. So we actually, contrary to most people in this space, we actually started with a liquid fund. So as a hedge fund, which has been running continuously since 2018, we used that as a vehicle to invest into, at that time, what we would consider liquid digital assets, which liquidity profiles looked very different back in 2018. And for those of us who were in the market at that time will know that that was a terrible time to launch a hedge fund, because the first 9, 10 months of that, numbers didn't look so good, and people were wondering, what are these crazy people doing in this sector, and why are they wasting everyone's time with it? So, I think that baseline understanding of market's not always up, and especially when you're managing a liquid fund is incredibly important. And the team at Spartan Capital has really been able to demonstrate a track record of managing that, and that was basically where we started seeing all of these opportunities that emerged around 2019, 2020, which were the early DeFi projects, things like Chainlink, MakerDAO, Aave, Synthetics. Like, they had really come to the market with a idea of something new. They were basically creating what would become DeFi as a whole vertical, and backing entrepreneurs in that space didn't really make sense through a venture fund structure, because there was no liquidity, there was certainly no market depth, and at that stage, still modest tickets were basically growing into large protocols. So that was really our strategy to then evolve from not just a pure play liquid manager, but really to expand the investment universe and start launching our first dedicated DeFi fund, which was our first venture fund. We've now launched 2 venture funds, one focused on DeFi, one focused on gaming, each of which are thematically focused, very much at the core of being crypto native. But collectively, we run an approach for covering basically projects, portfolios, and protocols all the way from inception. So we'll be from first check-in all the way through to exit, be it equity or tokens, covering that life cycle and trading in the digital asset public markets. Like, we have a view on what is happening in the industry, what's worth spending time on, what's real, and where we want to position ourselves. And I think that that's just fundamentally different from people who have come from a pure VC background and don't understand, what liquidity means, what token liquidity means, the short-term structures and challenges of that, and just the fundamentally different market dynamics and characteristics that are here. So a lot of things that are intuitive to us now after 4 or 5 years years, sorry, 5, 6 years, I should say now, running this, at the time was rather novel and not how the industry was thinking in a conventional sense.
Yeah, and the time flies, it's actually, I can resonate a lot because you might remember I was in a first fund of funds. So we were actually investing in liquid funds. And you're right, when we were trying to deploy and analyze the positions, it was like less than 120 hedge funds in the entire world. And it was rather challenging because you don't even have enough track record. How would you identify? So you look at the people, you look at their previous track record, you understand, okay, well, these people, do they really understand DeFi? Do they really understand what they're doing? And so that was a quite fascinating. So yeah, it's actually more than 7 years if you think about it in retrospect, which is
Yeah.
time flies. I cannot even imagine that's also so so dynamic. And so maybe I mean, you can consider yourself whatever you want, but I will call you an OG because I think you deserved it, like just by the years you've spent.
Spent enough wounds at this point, enough war stories to have seen things. Yeah.
So in retrospect, like looking at the early, you mentioned like all of the projects which I highly respect, right? And yeah, they're the front runners, like they're the pioneers of the DeFi space. Talk about Avis, Synthetics, Chainlink, others, Compound, so. What do you think are the biggest what like learning, like lessons that you have from where we started as a DeFi, I would say 1.0, where we are now?
Yeah. Yeah, look, I think the first thing I'll point out is how resilient the industry's been, irrespective of price action and volatility, and certainly several landmines that have come and gone over the year. Like the fact that most of those, and sure, we have Uniswap v4, right? I mean, it's version 4 for a reason. But I think just the way in which that's adapted to, the market's needs, requirements, and the scaling of the industry, right? So the basic concepts that we've been able to prove and validate in the early days was, well, you can have on-chain finance, like the basic principle of Bitcoin to create value on chain and then be able to have applications running on top of that, which, was the early narrative around Ethereum before you had even
Mhm.
staking and proof of stake on an Ethereum chain. Like the real use case, like everyone was scratching their head, like what was Ethereum for? And like, what could you actually do with a smart contract? I think that these are areas that have started to come back and today just prove how resilient we've been. So, from that perspective, excited to see how the actual concepts that we said, okay, this can work in a sandbox for a small asset class and a small group of people doing things. Now, how do we scale that up? And I think today, the fact that many of those early DeFi leaders are still in this space, again, is a phenomenon that I think is fundamentally different today. Prior to this cycle, if you looked at the top 20, top 30 projects on a CMC market cap basis, all the layer ones basically overtook themselves, and like half the people aren't there anymore from the 2018 cycle, let alone 21 cycle. And today, if you look at who are the DeFi leaders, many of those have been able to iterate and launch, maybe a new version of a product and project, but certainly still core users using it for the simple functionality that it was designed for, and it works, right? That's the thing that people who are still looking at this industry from the outside and not getting their heads around. It's like, yeah, I could do all of those things, but why? And today, the answer is very simple because it's faster, cheaper, more efficient, and more secure than any of the infrastructure that we're doing basically everything else on in the TradFi world. And how we view this, and certainly myself as a long-term believer in this space, what we're building in crypto is not just growing market cap from 3 trillion today to 30 trillion. We're creating the infrastructure that will run the entire financial fabric and system of the world. So I'm not gonna predict now, is it Ethereum, is it Solana, is it none of these, is it all of these together doing things differently? That's a different topic, but the point being, I fundamentally believe that there's a superior technology. Having things open and on chain is a better way to run financial market infrastructure. And that's why DeFi as a use case for us is really a killer focus, and where we're spending, an incredible amount of our time.
Yeah, it's hard to believe that, like, if you remember MakerDAO 2018, there was a first decentralized stablecoin backed by collateralized debt positions, right? That was 2018. Then Like then we had 2019 Uniswap, like with the AMM, like transforming like how like the DEX can work, and then only 2021 we had the situation where there's like the first 100 billion milestone, right?
Exactly.
And like now, as you mentioned, it's probably going to be trillions, but that's not the point. What is more important, like the new version of how I would say the narrative, real world assets, right? Tokenization and getting traction. People finally realize that it's more efficient. It's actually more secure. It is more transparent. It's auditable, right? And if we can basically concentrate this liquidity across like different positions across different like asset classes into one big marketplace, that's actually going to benefit everyone, right? So maybe you can share some of the criteria, right, where how you look at the projects, like one of the top three criteria that if I approach Leeor, what should I begin with to draw the attention?
Yeah, look, I think that this also comes down to at what stage of investment it is. And we have different pools of capital that we invest in, and we do a lot of advisory work with projects on helping them, grow their ecosystems and making sure that they get the right eyeballs. So,
Let's say early stage.
yeah, so for early stage, I mean, I think the baseline needs to be like actually doing something. And we talk about it's being better, more efficient, and which, yeah, like the buzzwords that everyone in the industry loves to talk about. Of course, it's all of those things, but it also has this massive UX problem, right? Like the process and step for example, any of our parents to get involved and get on chain and actually try using even Aave to earn a yield as a most basic, I have USDC, USDT, what can I do with this? Where can I deploy it? Like these things are still not intuitive, right? I mean, and that's where I look at us, we've come a long way in terms of the industry getting to where it is today from a technology perspective. I genuinely think it works and like I'll stand by that. But then how we actually interact with it. And that's why, for us, the focus has shifted away a lot from infrastructure, which we've been investing in for years, right? I mean, since the beginning, it's always been infrastructure, infrastructure. I mean, you cannot ignore the fact that most of the best performing investments in this industry have been infrastructure. Increasingly, though, the momentum has shifted to, okay, apps. Like, what are we doing? Why? And how are you building it? And I think it's no longer enough just to be the copycat project of this on the other chain, other ecosystem, because scaling up liquidity, I mean, people have seen now liquidity moves where the opportunities are. So even if you are able to scale a project, get some momentum on it. I mean, if it's not saying they're not secure, like, who cares, right? 2 months from now, 2 years from now, no one cares. And I think that that's where we are now, starting to consolidate around some of the long-term winners. And for me, it's really like working with projects, founders. Is there a real use case here that is different? And different tends to be solving for a lot of the UX usability topics and integrating in the way that they're able to actually, fulfill the vision that we all have for a basic on-chain economy, on-chain ecosystem that can thrive.
Yeah, I would say I 100% agree with you that the UI UX and DeFi is like it doesn't pass like any grandmother test. Like, it doesn't even pass like a highly equipped technical person test. Like I was showing several protocols without condemning them, like to my friend who's a incredible machine learning expert coming from Web2 experience. He was cursing at like literally, he's like, I've never seen, like I thought Web2 like is he consolidated a banking company and then a biotech company. He's like, I thought banking is broken until I found out DeFi. Like you guys talking about like
Exactly.
incredible innovation, but like it took me 30 minutes to even understand how to buy synthetic whatever the token they
Yeah.
have, the
Yeah.
stable coin, and then to stake it. So certainly we have challenges there, and we're solving them. I see a lot of amazing products emerging. But so this is number one. What would you identify as number two most important part? So would you think it would be still like, a product that is already working, right? Or you would also consider that like the revenue is equally important?
Yeah. So and I think that comes into then like value capture. And this is still like the constant discussion, I would say, at the early stage level, because people and projects or entrepreneurs that are coming to market, they're always everyone's always creative and opportunistic in how they're approaching fundraising, right? I mean, they want strategic partners. At an early stage, they may have not so much to provide or to show, but they certainly have a grand vision. And I think this idea of how can you value, equity of crypto protocols or like on-chain activity, in the sense of what are you actually owning if you're owning a stake in a company which is a service provider to effectively a protocol, right? So there's all of these complexities, and I think for us, when it comes to value capture, I mean, we do believe in token as you're owning part of a network. That's the asset, right? Like there is no hybrid structure concept. Of course, we invest in a variety of structures, but like when you follow through and ultimately where do you see value going and accruing, for us, we very much focus on ecosystems and projects that are able to demonstrate value capture into a token, right? And it's increasingly becoming the way in which the industry is evaluating price. I mean, things like on Token Terminal, you have the revenue KPIs and metrics. So a lot of these players who are nowadays benchmarking different layer ones, layer twos, layer whatever version you want to be on,
Mhm.
or protocols who are charging different fee structures for providing similar borrowing, lending, incentive structures, and so forth. It all comes down to that revenue capture. And ultimately, as this market becomes more sophisticated, which is what we're seeing now, is yeah, you need to have a benchmark. And again, on some of these fundamental values, everything looks overvalued. But if you believe in the long-term opportunity here, then it's still for debate of what a fair price is. But that's where we're seeing the opportunity. So coming in needs to be something that's usable and needs to be something that has a clear path to actually get traction and metrics that are long-term defensible. Because now we're in a I wouldn't say great market environment for altcoins, but at least people are open for business, right? Regulatory side, people are wanting to do things. Everyone's looking for what's next, how they can position themselves. And there's a clear few year window here where business is at least possible and open. So yeah, like from that perspective, what does this look like over the next 3 years when people are starting to increasingly move into this industry?
Yeah, and it's I would say US is driving this narrative with extremely favorable regulatory for now promises, but like I would say we have probably the most crypto friendly government ever in existence of crypto. So we have hope.
Yeah.
Now coming back to I want to ask you like, and you're welcome by the way, you can name the project or you can skip the name and you can just describe the modeling, right? What was the most balanced and the most efficient and resilient tokenomics that you remember? Like that's something that like pops out intuitively in your mind and as a great example of how to capture this value in the token utility.
Yeah, so there's one at the moment that we're specifically, it's not actually publicly launched yet, but happy to go through. And
Mhm.
I think that this shows where the industry is heading, right, from a perspective of owning an ecosystem. So, I mean, there's been risk and price oracles in the market for a while. And I mean, I can name the project Chaos Labs is a
Mm.
portfolio company. So full disclosure, we're an investor there was, they did a Series A, a large Series A last year, which was led by Han Ventures. And I think that the team there has gotten two things right. So one is they are crushing it in terms of adoption of their risk and price oracles, and are able to show that there is on-chain traffic metrics that are supporting a version of value that is accruing to a token, and will continue to do so. So if you think of Pith, Chainlink, I mean, those are the kind of category leaders in that vertical. What does owning a part of that network give you? Now Chainlink has multiple parts of its business, and that's exciting as well for different reasons. But the actual basis of the tokenomics here, in terms of what they're launching with it, really puts the network owner at the center of everything that's going on here. And I think that that's what people will increasingly expect to see, because this idea of a revenue share model, and I think that turning on the fee switch, like we've seen that with Uniswap over the years, and many of the dexes, and how they're
Mhm.
evolving, like this is almost expected. Now, the issue is that they're kind of applying that to existing and legacy tokens. And the issue there is, what are the allocation, and who are these fee switches really benefiting? And I think that that's one of the Achilles heels of the industries are the projects that really started very early, got big product market fit traction. They're now trying to find a way to stay sustainable and relevant. And Unichain, I think, has done a great job of positioning Uniswap as an app behind an infrastructure, which we can then launch multiple projects and make a more sustainable ecosystem for itself. So very smart move from them. But the second point where I think is exactly what Chaos is doing. So one, having a dominant product and service, which is clearly on chain that you can have visible metrics on. Second is then engaging with the users around it and having specific applications, which are not just B2B services, but really, I mean, when I think of what this industry is, it's not just about the infrastructure, right? I mean, at the end of the day, it's applications, and what makes this industry unique is it's people driven, right? I mean, the whole concept of peer-to-peer networks, trustless, permissionless networks started with this peer-to-peer concept, and that's why this notion of a token ecosystem needs to be based on its network participants, which ultimately and still today, by far and large, are individuals and holders, right? So I think having them at the center of this, not only seeing what their revenue share is on and the incentive structure is, but also having the incentives to be a part of the applications and getting involved with it. I think that's what we're really seeing. And the tokenomics around that for incentivizing people to hold them in innovative ways, and there'll be more of this in the market, I think is really starting to adapt and become a lot more interesting as we go into the next cycle here.
This is actually a very interesting topic because that was my next question to you in terms of the risk reward parameters. Like, and I think it's a brilliant example of Chaos Lab. So like for someone who's not familiar with Chaos Labs, right, so most of their clients are B2B, like, or they have also a B2C segment, and how would the regular retail investors can benefit from the product and kind of leverage in their analysis of DeFi products?
Yeah. So they absolutely do. I mean, today it's predominantly set up and known for its risk and price oracle. They are launching additional verticals and things that'll be interesting soon. But that core basis is most people already are using it because they're the main risk and pricing feed for, I mean, things like Jupiter. So if you're trading any perps or using dexes on Solana, for example, these are where you're already using them. And I think that's a step to move into in that direction when it comes to what you're able to do once you have those integrations. And that's where I think at the core of this industry is still 2C applications. And really, I think people that understand that will increasingly be more successful in acquiring the mindshare in the years ahead. And I think what that looks like is not only having a single purpose application that you're using. So for example, Uniswap as a DEX solution, but really Uniswap or Unichain as an ecosystem of applications, which is not just the DEX itself, but also where you're drawing your yield from. And you're seeing more and more of these applications move in that direction. I mean, like if we think of Aave and Aave Prime, I mean, people are really converging around a suite of financial services. In the same way that we look at public companies, right? Like Coinbase diversifying away from pure monetization of retail sex trading as a business model, they've opened up entirely into all aspects of retail, institutional, spot derivatives, and they have their own ecosystem chain, everything around that. And I think that businesses in this space that are successful long term will build on projects and protocols that have a multi-service functionality like that, and owning the network token will be that key, like the key way to participate in that ecosystem. And that's no longer like a transactional relationship of pricing it based on these volumes that I'm seeing. It's you're also backing their ability to develop further into the future and be a successful long-term ecosystem. And I think that we saw that in the early days with the layer one ecosystems when they started competing with each other for mindshare. But we haven't really seen that since. I mean, other than offering better TVL on this chain or this protocol, that one, like there has to be something more than who can provide you a slightly marginally better interest rate or slightly lower, basically trading fees, right? And I think that that's where the whole ecosystem moves now to not just being a function of, I want to have skin in the game of the protocol I'm using, but the ability for these protocols to adapt and actually become, multi-service instruments for you.
Now, for institutions, I'm sure there are a lot of sophisticated, explanations and research papers, but let's come down to a person who we actually trying to help, a person who is like unbanked and they is like have, I don't know, maybe a few $1,000s to deploy, and now they have to choose, there's a plethora of the different protocols. You mentioned Aave, Compound, Yorn. So let's say, what are the core risk parameters, that you would advise for people to look into? Because most of the time people just look to, oh, where's the higher yield? And they forget about the risk parameter or they just don't know how to analyze it. So what are the parameters?
So look, and I think this is really a good question around what does on-chain mean, right? And I think it means different for people that are speculating and trading in the markets, right? And that exists in all markets. So people are often critical of this industry. I don't have any patience for that, right? Like speculation is what makes and drives liquidity in all markets, and FX anything. So that is a use case and that is what happens. But specifically here, then, when we start talking about, okay, how do we safeguard assets and not participate in speculation? I think then it's really going down to the base level understanding and consensus of where assets are sitting in this industry today. And, the best example I like to give here is, I mean, again, another great project out of Europe, like Safe, right? So spin out from Gnosis back in the day. I mean, Safe is securing, I don't know the numbers right now, but between 80 to 100 billion in its multi-sig wallet solution. It is
Hmm.
by far one of the largest basically infrastructure providers in the industry, which no one really talks about, no one really understands, but a lot of the layer one foundations are using it as a way to keep assets on chain, secure, and off their own let's say risk profile. And I think that this is how the vision of the unbanked becoming banked works, right? You have a battle tested, secure wallet solution that is able to store on-chain assets in a way that you can sleep at night, the equivalent of under the bed, under your mattress, right? That's not in a USB stick, that's not in any other way but an online format. And I think that they've cracked that code, right? And if you think about what 100 billion, 80 to 100 billion that they have, I mean, this is bigger than most banks in Europe, right? In
Yeah.
terms of an asset base. These are already live, functional, working in a way that is already more advanced than many of the largest financial institutions in this world. And that's what I think when we talk about the technology curve here. I mean, the first step was, okay, I have my Bitcoin and now I'm secure. Well, for an unbanked person, yeah, maybe you found a way to get access to Bitcoin, but there are still limitations of where you're storing it, how you're holding it. And I think we've already addressed this problem. It's now about, okay, how do we actually normalize and build consensus around what is the right way to do this in perpetuity? And I think these projects already exist. They're out there, and they're, working, right, in a battle-tested way.
Now, you mentioned the Safe. I'm a big, by the way, a big fan. I'm using it. Like, I've been like, I think testing it like the next year it's emerged, and I actually applaud them by listening to their customers, and they
Yeah,
improve the UI UX incredibly. Now, what a lot of people probably do not know that they also have reserve funds, right? And they actually, like, as you mentioned, like a bank, they try to provide like the emergent treasury, operational reserves, like, they have yield generating reserves, and they have the certain protocols of safety, like, how to ensure and the risk mitigation, like, of the assets, right? As a person who's more familiar with that, like, maybe can you draw the parallel between how banks are operating with their reserve funds and when, like, we've seen like three major banks in the last few years, like, collapse, like, and why do you think, for example, that some like such company like Safe is actually more resilient in how they manage this
yeah.
on-chain reserves?
I mean, honestly, great question, and I love going into this because this is the whole crux of the industry and why I think it matters. So, baseline, I mean, the business of banks is actually very simple. If you look at here we're talking about, let's say, retail banking or transaction banking relationship is bank takes deposit, provides you with a rate for doing it, and then monetizes it in different ways. Not only are they able to do that, though, they're able to do that in a leveraged way, right? And we have liquidity profiles, and like we can go and talk hours about how that system evolved and got to where it is. But let's say that there's a version of this that makes sense, and the world kind of agreed that that's how it should be. I think that people often forget. I mean, the whole story of Bitcoin here and what happened. I mean, it happened exactly because that conventional wisdom that the world agreed that this is how it should be and it works failed, right? It started in the wake of the financial crisis, specifically on mortgages, right, which triggered this subprime mortgage crisis, which is
Mm-hmm.
exactly this point that even mortgages, right, the least risky kind of side of finance and where banks make basically most of their money off the retail deposits, right? I mean, retail banking customers make money through buying mortgages effectively, and separating what is that first role, primary function of a bank, which is I want to put my assets because I need to put them somewhere, and there's only so much cash I can store under my bed before it doesn't become comfortable anymore, or I'm paranoid and I don't want it to get stolen. It needs to go somewhere, and I think that very basic human need is one of the areas that makes me really excited about what this industry is about, because we've basically taken that basic analogy and said, okay, well, as soon as my stash at home is no longer comfortable for me, and I want to put it somewhere in the most secure way, which isn't going to start lending it out, right? As a basic requirement, I want to know that no matter what happens, I have this money, which is, why people hoard gold and other cash instruments, right? But I'm going to put it in this instrument. And the fact that that's not being monetized, that without your consent at least, right, and is straightforward and transparent, that It's your keys, you own the assets, everything there is yours, and we're not leveraging it and lending it out. That's the core principle. And that's why, like, I mean, what they've done is really such a phenomenal technological advancement, not just for people in the West and who have access to banking, but really for everyone. And the world where everyone's banked looks something like everyone will have a version of a safe or whatever it is. I'm not saying that that's the only one and they're going to be the winners in this space, but we will have on-chain kind of wallets like this where it's just the most
Yeah.
secure way to store your assets. How they're able to generate all of the other, let's say more complex, sophisticated instruments, and the way that they do that is really still, I mean, at the early stages of that. But it comes down to, at that point, you're opting in, right? The agreement that you're making is, I want to participate in borrowing and lending activities. I will take a risk in order to earn a reward. And what makes the whole ecosystem at this point, so robust is, in order for you to do that, the collateral is sitting there, right? And there is no additional counterparty that's being introduced, taking that risk, leveraging up their books, and taking that risk on your behalf. It's your money sitting there. And yes, you can take risks or not, but that's, at your discretion. And I think that that's the fundamental disintermediation of what the banking system works, which is why it's interesting. So incredibly bullish about this from a technology structure perspective. I think that we're just at the very beginning of understanding how powerful this movement is when it comes to people managing their own resources and doing that in a secure way.
Yeah, because it was interesting when I was asking my friends who are like, working in banking, like most of the time they're telling me that, okay, well, we have like 10 to 12% reserves maximum, like at any given point of time, right? When
That
we
sounds positive even, yeah.
Again, that this is very positive like scenario, right?
Yeah,
We're talking about like, most DeFi lending protocols, they're 150 to 300% collateral.
exactly.
Like, and look, I tried to explain it to my friend recently, like, the minimum 150% collateral ratio is, I mean, essentially like, 10 times more than in traditional banking systems. And I failed because he didn't believe me. He thought I'm like, I'm lying. Like, I'm like, listen, this is on-chain data. You can go and verify it. He's like, no, this is too complicated. So, so we have, I feel like we have this golden goose, like, like, and like, we are not, we're still searching the right words and the right like narratives to explain it. So, in your opinion, like, while talking to, traditional people, like, what do you think is missing in making DeFi actually like 10x where we are now?
Yeah, I honestly think it's just time, right? I mean, the biggest challenge the industry faces is its own success, right? When things go up so fast, and there's no denying. I mean, Bitcoin is an asset class, or as an asset, and the way that that's been a proxy for the whole industry, like the immense wealth that's been created in this space. At the same time, all things that go up come down in at least some capacity, and we've seen that over the years. So I think these shocks to the system have prevented people from normalizing that there is also real things happening in this sector that is not only for fun because developers are looking for things to do and VCs are looking, for things to throw money at. It's because it actually makes sense and it's just a better product, which again is how all technology starts and is developed. And look, the analogy I like to give here is always, I mean, if we think about the evolution of cloud computing, right? So the cloud was actually invented in the 70s, and they started with having the ability to function and have things stored on the cloud until we actually got Dropbox and Google Drive and our ability to actually store things, online in the way that we do, and for us to deem that as a safe and more secure way than me having it stored on my own. We didn't even have laptops then, right? But desktop, like, was a crazy concept. Like, why would I save it on the internet if I can save it, on a cloud server when I could save it on my physical hard drive that's directly in front of me? And I think it's here, it's almost the reverse logic of like, yeah, I mean, why would I store it under the bed if I could store it in a more secure way, sharded into a multi-sig wallet that I trust and can be recovered if it gets manipulated in different ways. I mean, not the underlying private keys if it's stolen, but has its own risks as well. But also having money under the bed at home has its risks, right? Also having your money in a bank has its risks. So I think that we're really at this point now where people are talking more about the industry than, yes, Bitcoin, digital gold, and I think that's a very strong narrative, and that has spun off so many other opportunities. But now that's starting to normalize, and cloud computing. I mean, if we look at Amazon's business today, Amazon started with books. Today, by far the biggest value driver for that enterprise is their ability to provide web servicing, AWS, right? And
Yeah.
it's really just the beginning of what they're doing. So the evolution of cloud, I think, is a great. I mean, everyone talks about the evolution of the internet as the right parallel for this industry. I really think evolution of cloud is as really a core driver for us to think about as one of the aspects. I mean, DeFi and on-chain finance is one of the aspects of blockchain and crypto, and I think that that's still the primary driver for the foreseeable future. But it's really gonna ultimately come down to our ability to have level heads and start to take it more seriously, which will happen when the volatility starts to normalize.
So since you mentioned about the cloud narrative and overall, like, the evolution of like DeFi and like where we're going, obviously we cannot, escape the topic, like, which is like, the white elephant in the room, which is AI right now. There's a lot of like, we see MAV bots, like, on-chain risk analysis. There's a lot of AI implementations happening. Again, still very early, a lot of experimentation. Sometimes it's just like, just artificial AI, like, dragged like by the head, like, but what do you like, what examples, like, I would say reasonable and organic examples of AI implementations have you seen in the projects you invested in?
Yeah, so I mean, I like to segment the AI opportunity into two categories, and like we're very deep into this space, very focused on it. I used to be a skeptic. I've been converted, and I lead with that. The point being, and where I think most of the attention today is still on on-chain agent activities and autonomous actions, which if we really break it down, is AI logic held privately being applied to on-chain public activities in open source activities in open source world, which is interesting, excited. Like that didn't get me comfortable enough to think that this is now the game changer that would fundamentally transform the world. And of course, I love where we are with bots, and there's great projects like Biconomy. They launched Biconomy is like a middleware project. They launched Nomi recently, which is a on-chain agent, right? And taking that direct, like 2C, going to again back to consumer, everything's about the apps now. Like those are the types of projects you start to see who are developing well there. I mean, I saw Olas last week raised a nice financing round, so they're one of the leaders in that category, and these are projects that are doing well and are at the forefront of the thinking around AI. The other side of it, and this is really where I start to get actually excited about what's possible, is the fundamental AI built into the infrastructure itself, right? And the best example that I've seen of someone doing this, and again, not financial advice, just pointing out what I think is a respectable vision and how that's evolved, is really with ICP, World Internet, or Internet Computer, sorry, and the Dfinity Foundation, right? Also Swiss-based project. And they've had a bumpy ride right from the beginning of their launch, crazy kind of developments and stories, which is absolutely not the focus of this and not what I want to talk about. But the basic logic of what they've done is created an alternative. The easiest way to think about it, and what they've been talking about for years, is created the AWS on-chain, right? They're their own layer one that is AWS basically, and the whole point of it is it's the perfect application to be running and having the intelligence layer of AI. So the AI models that are being developed by all of the largest institutions in the world today, and most exciting, obviously DeepSeek has been top of mind for the last few weeks, putting that into a way that is all of the concerns that we're talking about. Okay, where is the data? Is the government involved and so forth? That's still the biggest risk here, right? It's not that we're doing and using AI for the applications and for the autonomous activity. It's what's the underlying backbone of the AI, right? So the model training, again, is sophisticated. That's what makes them unique. But what is actually happening on the back end? And that was, for me, always the killer use case for moving away from the initial use case of blockchain, which was Bitcoin, right? So the store of value, digital gold, that's exciting. But if it's only that, then let's just, cut the shit basically and talk about Bitcoin for the rest of our lives. But I don't think that's it, right? There's a lot more here. And that's where we start to look at these applications that can actually facilitate a decentralized web that makes sense, that can run AI logics on its models in a way that is in the better interest of society. And I fundamentally believe that there are, if it's not this project, other projects like this who will come and really own that space. And for me, it's not surprising that there are many, Me Too's now running around, like full credit to them as well. I mean, tier one project, obviously Near is positioning itself as the AI chain. But I think the way in which we're approaching this, of having AI logic implemented in the chain, in the core underlying basis of what is in the code as opposed to running an AI application, fundamentally different things. And at the moment, I think we still need to go back down to that base logic of who and how can we actually bring AI on chain. And I think that's really where a lot of the bandwidth needs to go right now.
Yeah, I mean, I met Dominic, from ICP during
Wow.
Davos, right? So and fascinating, speech. The presentation was great, and I'm also a big fan. But there are when we started, we actually built few applications on top of ICP, and there's not many actually projects that are doing that, But I should say that the challenging part that they even native programming language Motoko is it's very complicated. It's technically it's even more complicated than Solidity, or any other of given competitors. So, and the interoperability, if we're talking about the cross-chain solutions, that's what I think is another thing, which are lacking, right? We need to have. That's, to be frank with you, what you're bringing right now, this narrative makes me even more bullish on Chainlink. Because what they're doing is actually trying to make sure that whatever you're building, okay, it's going to be automatically cross-chain. You don't have to worry about which blockchain you're
Yeah.
doing it on, right? So,
Yeah.
so talking about this challenge, right? I have different viewers here, some of the people who are just founders, or and people who are thinking of building their own project. It's becoming a big challenge. There's thousands of blockchains, right? And everyone is saying we're better than others, like the TPS, the TVL, the on-chain activity. Most of the founders don't really care about this. What they care
Yeah.
about, how will you support us? How easy it will be to integrate with you? And can you, beyond the level of integration, can you give us the chance to build it cross-chain so that we don't have to even ever worry about it, right?
Exactly.
So what are your suggestions when you talk to your portfolio companies who have this challenge? Let's imagine they haven't chosen the particular blockchain yet.
Yeah. Yeah, look, I mean, Interop itself, I mean, Chainlink with the CCIP is definitely one of the leaders in this space. We were seed investors in Layer Zero, been on the journey with them for many years.
Yeah.
Axel is another one of the category leaders. So I think the concept itself is not new. It's really more about, why do we need multiple chains and ecosystems, which is still the biggest skeptics on this, right? So
Yeah.
if we had a network that did everything that we actually needed it to do, is this then a redundancy in the space? And I'm not promoting a one chain, wins all future here either. But I think there will be different things that are applied for different opportunities, and that's to the topic of founders. It's really this segmentation of, if you're a B2B infrastructure entrepreneur building infrastructure, go and be a B2B infrastructure entrepreneur building infrastructure. It's a fundamentally different thing that you're doing than 2C applications, which again, I think is for us increasingly the focus of how do we go now and build the applications running on these things. And of
Mhm.
course, the biggest way to springboard your project and basically scale things is go where the liquidity is, right? If you're a DeFi application, you're not going to sit there on a chain where there's nothing, right? So a lot of these ecosystems definitely have questions to answer, not around whether they're technologically superior or not and whether it makes sense, but it's around, can a project actually come and build on you and compete with the amount of capital and bootstrapping that's happening in other ecosystems, which again is why, if I really think about where we are in the cycle of applications in this industry, we're still very early, right? And there are applications that work, and V4s of Uniswap, and this is great, but that's still just the surface of what we're doing here, right?
Yeah.
And I'm excited about where this is going. I think projects like Chainlink are certainly at the forefront of that.
Yeah.
But they will, themselves, interoperability for what, right? I mean, they're a B2B infrastructure provider themselves. I'm sure that they're looking at ways to tap into tokenization and other things that allow them to build B2B infrastructure for a specific purpose, which is where I'm sure the next wave of focus is coming on an institutional side.
I love how your politically correct answer
Don't
without.
want to offend anyone, but yeah.
Yeah, yes. No, I totally agree with you. And then I think it's whoever is reading between the lines, they will understand. You just go to DeFi Llama and the picture is there, right? And where
Yeah.
the TVL. But since you mentioned Layer Zero and XLR, I actually had an interesting discussion with people who are now looking into potentially mirroring the TVL and on-chain activity. So that they say, okay, we want to be multi-chain. We don't want to marry with one particular partner. we want to build on multiple. And I've seen those like people are building simultaneously Algorand, Avalanche, Hedera. And they give them a lot of support, obviously, because they're interested. But then there comes a challenge again, this like weird competition and battle. Who's gonna get this on-chain activity, right? On DeFi Llama, like, do you think it's possible that eventually we get to a like situation where the TVL, the total value locked, will be mirrored for multiple chains?
So in theory, I mean, yes, why not? In practice, it's more difficult, right? Because there's a reason why the TVLs are on chain and where you really run into risk, right? Most of the biggest on-chain faults, other than security faults, which tends to be the human that got, scammed or whatnot, but most of the issues that happen are coming from bridges and versions of mirroring and moving across right chain. So I think that we also need to be honest with ourselves as to why that's happening. And it is a vulnerability that exists. It's been well documented. People have come with all solutions, but people trying to abuse things also get more creative. So of course, I mean, my base thesis is ultimately we need to get to a point where people don't care, what ecosystem they're building on, right? The same way that a Web2 entrepreneur wouldn't come and start talking about, oh, should I use, HTTPS to build a domain and website for an e-commerce business? Like it's not even a consideration of what they're doing because it doesn't matter, right? I mean,
Yeah.
the application, it's the e-commerce store that you have that is monetized and valuable. So over time, and I do recognize that Web3 is different because here we're talking about on-chain finance, which is a fundamentally different thing than on-chain
Yeah.
purchase. So I get why we talk about it so much, but I do think interop baseline, yes, is incredibly important and a massive thing. Liquidity and the ability to transact and operate across multiple chains, incredibly important and a long-term thing. But a lot of those opportunities have been solved by far and large as a basis for what they're doing. And now can we incrementally build better mirroring and basically cross-chain liquidity opportunities? Yes, of course, there's always ways to improve it, but unless we're coming up with a reason for why we should be doing that, again, the next growth in this industry is coming from applications that actually get people onto and into the ecosystem. It's not about having on-chain liquidity move around even more, it become even more composable, which again, big argument for the industry, but I think that we have the baseline infrastructure for that already workable, not perfect, not all places, but workable.
Got it. Now, if I will ask you, like, I love your Swiss answers. It's brilliant. Like, I can tell that you've been in the best universities in the world. In terms of like you mentioned you have a DeFi fund as well. Like, so like if the venture capital part, I think you elaborated quite like brilliantly. Like, I think it's more or less clear. Like, so now if we do the segue a little bit like on the DeFi strategy, let's imagine there's an amazing application that they build their own protocol and they want to attract you as a DeFi liquid fund, right? So what is your major consideration when you look at those solutions?
Yeah, I mean, look, at the end of the day, it's risk, right? I mean, there's no such thing as a free lunch, and having gone through however many landmines that we've avoided, right? And in Asia, I think for us, so it was very clear at the time. I mean, with Luna, right? I mean, there was a lot of excitement around this. All of the big guys globally, everyone was excited about this, and that idea of just consensus thinking doesn't mean that people have addressed the underlying issue of risk. So, base assumption is rational market. People understand no such thing as a free lunch. If people are offering crazy rewards, there's a reason why they're offering crazy rewards. And that's a way to compete, which tends to be additional risk. So for the large part, in terms of how we manage, external capital and what we're doing with things, we stay away from actively participating in things that certainly things we don't understand, but things that we think are taking, mispriced risk, so risk that is not paying a risk return profile that we deem worthwhile, which is a lot of things, and therefore tend to not participate with the pools of capital that we have for venture investments in actual liquidity provision for the protocols themselves. So different pools of capital do different things for different reasons, and that's been our approach as a way to stay credible to what our mission is as a capital partner to the industry. course, there are ways to make more money in this space, and there are opportunities that we explore on that through the provision of liquidity and participating in pools, for example. But as a baseline, as venture investors, we stay as venture investors on the liquid side through our hedge fund. There we take positions and are more open to different things there. But we certainly have this different segregation of how we approach, what is appropriate for what risks and what that yields.
Got it. Now, if you were to identify like one of the biggest trends that people are not looking into, that's right now we're having in the industry, and people are like, not as deep as you are, and they don't like even notice them. What would that be?
I mean, honestly, it's impossible to avoid AI at the moment, right? I think the amount of momentum that is being generated just through global developments in AI, that is really the main catalyst, I would say, for people's mind share, creative thinking, and
Mhm.
what we like about and how we view this industry is it's a sandbox. I mean, you have all of the infrastructure now that's come together over the last 15 years in a sandbox, and people are able to build and adapt into things. So, I mean, the idea of Web3 meets AI is for us particularly relevant, and we see that first and foremost through financial applications. So, I mean, DeFi is really, I mean, in our DNA, and where we focus a lot on. I mean, we have a dedicated gaming fund. We spend a lot of time in gaming ecosystems in Asia. It's a core focus for us to work with some of the best Web2 entrepreneurs in launching Web3 applications, games, game studios for a larger audience and a potentially global audience. But where people's mind share is today, it's really on the intersection of Web3 and AI. And for me, that's really these financial applications that can be built and leveraged.
Yeah, I'm sure you probably heard this quote from, I think it was the CEO of Tether, which she wrote that the quantum resistant addresses will eventually be added to Bitcoin before there is any serious threat, So do you share this quote or not? Just curious.
I always love where they're at. Massive contributors to this industry. There's no doubt about it, and I hope they're right. I think at this point, time will tell. I don't have a clear view on what the sequencing will be, but at the moment, there's 1 point something trillion reasons why people will do that, right? And to defend and protect the Bitcoin value and ecosystem. This is not chump change. This is not just a hobby project. This is, again, a real industry that at this point has still a smaller market cap, or depending on the day of the week, than Apple, right? I mean, so we're not through the inflection point yet, but enough reasons for people to care about what's happening here. And I think these legitimate security concerns of quantum will certainly be addressed, and I think that there's enough incentive structures in the ecosystem to do that.
100%. How can people reach out to you? Let's imagine they want to like read more about like what you do, your research, or they want to pitch you. So where are you more active?
Yeah,
LinkedIn, Twitter?
best on Twitter. So have a lot of DM flow on Twitter. Telegram gets a little bit too crazy most of the time, but yeah, Twitter at Leeor Groen, just my name, the only one unique name, crazy
Yeah,
story behind that. So at least that keeps it easy when I'm interacting with the world, and like to be open, transparent with everything I'm doing. So yeah, you can see there some of my portfolio. Again, no investment advice on this conversation, but just obviously advocating for some of the things that we found interesting in this space, and really excited about where it's all going.
if I may, I know that you've been also a victim recently of like AI-enabled video scams, right? So what is your advice? How can like a regular person can differentiate like a highly sophisticated video scam that is actually, and people who are, I would say, incredible social engineers, like, what's the first tip that you give to people to see that like this is not the person that's in real life?
Yeah. Yeah, I mean, look, the first thing, I mean, is really like, and I'll just actually talk about it for a second because I think it was funny, right? But like
Yes.
the basic scam that was going around was, it was between myself and partners from other funds. which again is a bit of a red flag, right? Because we like to be collaborative in the industry and work with other VCs and ecosystem partners, but very uncommon for us to hop on a call, a pitch call together and want to hear about your project together with other VCs who are ultimately competitors to some degree in allocation. So this was reported to me from multiple entrepreneurs that I'd reached out and they were putting together a call with multiple funds. Different funds were presented to different people, and suddenly everyone was on the call and they were trying to talk, but there was no sound, right? And I think not having the sound and you being on the call with another fund, like multiple funds, it starts to be like, okay, well, if I can't hear it, and then they're actually sending through the ability to download another application, which is where the sound is working, and that's how they get you. And I'm sure still literally everything you own. So things are getting more sophisticated. I think there's still like a sanity check where she's like, if people are sending you a link and you can't hear or validate anything that's happened like properly, it's probably not worth clicking on that link. Right? I think that's kind of the first sanity check. But I mean, just to be said, when we saw the quality of what was happening here, I mean, initial reaction was, holy shit, if these guys can do this, and at some point you can actually see the conversations happening.
Oh, they can actually mimic the voice. That's the
Yeah,
crazy.
exactly. They're
Easy.
mimicking the voice. They don't do that at the beginning because they want you to download the link. But then once,
Yeah.
like they get you. But then we're like, okay, if you can do the voice and have it this way, then can we start doing our LP update calls and start doing pitch calls for our investors without actually being on them, right? So again, to make light of a ridiculous situation, these things are like incredibly well designed and executed,
Yeah.
and it is genuinely concerning about how effective they are. So a lot of this stuff going around now, and sadly, it's just the beginning.
No, for sure. I had a previous interview with David Johnston, like, so he's now a big contributor to Morpheus, and like before he was in, Multicoin Capitals, So he told me that he's now using only Signal with all his family. He even pushed his grandmother to download
Oh,
Signal.
to signal. Yeah.
And 1 month was pitching her like how to use it, like, and educating, like, so like I agree with you. Unfortunately, we live in a world where like, yeah, you have to have checks and balances and like more of as you mentioned, sanity check or like conventional wisdom that like, okay, like probably your loved ones will not ask you for money or like, something like that, right?
Yeah.
But a lot of people fail it, like, and
Yeah.
especially when you're in a rush. So I just want to also emphasize, be extra careful. I know there are a lot of
Yes.
victims. I mean, if highly sophisticated VCs can actually like take this bait, like what can we tell about like the people who are like, like in the rush, in the routine of the day, right?
Exactly.
So just want to do this precaution on your example, right? Because you're the victim.
Absolutely.
So, last point, like, which is I never notify my guests about this, but I think this will be the most important question I will ask you during the interview, right? And this is a personal question. I know that whatever we do, like we do for a reason. There's a purpose of everything that we're doing. At least I want to believe that most of the people at least think about it, right? So my question to you is, what is the meaning of life to you, Leeor?
I love that. I love that. This is how you know I haven't watched enough of the podcast episodes yet, huh? So you got me.
Yes.
Um, No, look, I mean, I'm someone that's recently started spending time in the US, really just following through and trying to see what is everything about and like what's happening here in terms of the big picture. I loved living in Switzerland in a little village and kind of looking out of the ivory tower and seeing, oh, those problems exist everywhere else. But for me, it's really the journey of making an impact and giving to the world, right? It's like opportunity, like life is a beautiful thing. We have an opportunity to make an impact, and if everyone leaves it marginally better than the way they found it, then that's a great trajectory that we're on. Reality is that's harder in practice, but I certainly do think that what we're doing in this industry can contribute to that. And I actually went to grad school to do energy and environment and sustainability. And had I not discovered Bitcoin in 2016, I'd be working in probably in ESG and other buzzwords, trying to make the world greener. But this was an opportunity to really what I still think, right, and going back to our discussion on SAFE and the unbanked, is to really build a financial fabric to the whole world and actually make it a basis financial freedom as a human right, and I think that's exciting. But the overarching goal there is to make it incrementally better so that everyone else can profit from that in the future.
Beautiful. Thank you for sharing that. And I sincerely wish you like lots of love and lots of luck in what your mission, because I think that that's amazing. I think we're in a very similar journey here, right? Again, thank you, Leeor. Learned a lot from you. Hope we're gonna do it again, right? So and then yes, I will I will paste all the links to your profiles and to like Spartan Group, obviously, right? If you're watching this and you're excited about Spartan, like it's an incredible VCs. I vouch for them. I know that like a lot of the portfolio companies are exceptional, like groundbreaking projects, and the way Leeor described, like I think like they're one of the oldest, one of the most like knowledgeable people who can actually, beyond money, add you a lot of value and advisory how not to do, right? And what are the actual reasons for you to be successful and we need to do. So definitely reach out. And if you're building exceptional project, like now you have the conduits. Thank you so much, Leeor. Really
Perfect. Thanks so much, Constantine. Great to be here.